Good morning, everyone. Welcome back. Hi, Patrick. Hi, Maciej. Another good or gold morning. Welcome, guys.
So
Good morning.
what's the difference between good morning and good morning?
Well, good morning is general. Gold morning would be when Maciej talk about gold because, again, we saw another crazy move yesterday. So we're going to talk about that in a second.
Amazing.
Yeah, welcome, guys. Thank you, team. Again, any question, guys, please share it on the stream. Today, we're going to talk about a lot of interesting topics. I think we're going to start off by looking at what happened yesterday. So yesterday, we talked about Meta, Microsoft, and Tesla. If we go into the chart, the earnings overall were positive. Meta, as you can see here, up 9%. Pre-market, crazy move. After hours, Tesla as well, up 2%, was up 3-4% yesterday. Let's see how we open. And Microsoft, not so good. So Microsoft actually did report decent earnings, but the market kind of like didn't believe in that, and the stock is down now almost 7%. So very, very interesting action there. If we look at the earnings for today, let's go here. So we have Apple later on, Visa and MasterCard, and then if we go to tomorrow, we're going to see oil companies starting reporting. So that's going to be interesting as well, understanding how the energy market is doing. But let's go into the dashboard and let's go into Apple. Right. As always, we start from our Q score. So this kind of like gives us immediately an overview of the asset. We can see that we are in a neutral position coming from the option market and in a kind of neutral semi-bearish position coming from the momentum score. Slightly positive seasonality and of course very high volatility. Volatility is now at 27% versus a 17% historical volatility right there. We can see our VRP here. This shows us kind of like what we typically see before earnings, where we see an increase in implied volatility versus historical volatility. This is kind of a good scenario for option sellers. You basically are experiencing a higher volatility versus historical volatility compared to the past. So you can actually probably get more premium from the same option that you would sell in a different occasion, like here. So very, very important. Look at the difference between IV and historical volatility. Very, very important. And then we can also look at the option source. So we've been kind of like in a neutral scenario for the past few weeks. The stock also has been kind of like in a range. So let's go into here. Let's go into our wider time frame. Right. So if we look at the overall trend, we're still in kind of like an uptrend scenario. But if we look at the last kind of like couple of months, we are kind of in a range right there. Right. So this 240 level, this 289 level, 290 level here. If we go back to our dashboard, we can look at our swing level here. So we have our lower band 246 and our risk trigger 266. So those are kind of key areas that we can watch for the next 5 days. And if you wanted a more longer term kind of like analysis, 20 days, we have our lower band 236 and our risk trigger 276. And of course, at the top here, you can see kind of like the back testing results of the model going back about 104 days, so about 3-4 months. Let me know, Patrick, Maciej, if you have questions.
Oh, everything right now is clear. And we are near The lower band?
So the lower band 246, yes. So we are about 10 points. So if I go here on our indicator, other swing levels.
Fabio, we have a really great community, and most of the time we get one question: how you would be play this now doing the earnings, before the earnings with our models? What would be your trading idea? Of course, no financial advice, no trading signal, but what would be your personally plan A, plan B, or maybe plan C?
So I think so if we go back here. So again, what I would be looking for. So the first thing, you want to look at the overall positioning, right? You can see here from the matrix like how much gamma is expiring a certain expiration. So it depends on how. So if you want to play tomorrow's expiration, for example, which is only 1 day to expiration, 2 days to expiration, you can see how the positioning there. If you want to play a longer term kind of play, you can see where we have a lot of gamma expiring. So over next few expiration here, like next week or the following one, the monthly one from February. So it really depends on if you are trading weekly expirations, right? So weekly expiration, obviously, remember there's not a lot of time to expiration. So it depends if you are a buyer or a seller. If you are a buyer, you need to account that we are in a low IV rank. So it's a good environment for buying volatility, but at the same time, you also want to monitor that the differential between IV and historical volatility is also quite high, right? So that's two things. If you are a seller, so in this case, most likely I wouldn't be a seller because you are kind of selling in kind of like a lowish volatility environment. So you could, if you want, if you are a seller, you could be selling spreads using, for example, our swing models, 5 days or 20 days, right? So if you wanted to play a longer term period, you could use that. And then also you can look at term structure and see, okay, like we have a very high volatility in the short term of the curve. Volatility tends to go lower in the long part of the curve. So you could also like place like time spreads to benefit from volatility crash, for example. So there's different ways of doing it. Directionally, again, if you're a directional trader, you buy the stock, you can use kind of like the Q score. But there's like, for example, there was more on Meta yesterday than there is, for example, on Apple today. Like we are kind of in a neutral scenario, so I would be a little bit cautious here. Hope it makes sense.
Okay, yeah, let's do it.
And then basically, if you then want to go into kind of the chart, you can kind of use the different levels to kind of like understand the areas that you want to be in or out, and then use them in conjunction to, like, for example, you see this big area here. This has been a very big support area over the past few weeks. So again, it coincides with the lower band from 2 and 3 days ago, and yesterday, I believe. So this is going to be a big rejection area, big support area. And then if you wanted to do to the upside, then you have this big cluster of risk trigger. Why is that important? Because also we can go into our swing model and we can also look at the success rate of the risk trigger. So we have a 77% chances based on history. Again, this is based on past price action, that the price will not go above this level. So this 266. So if we go back to the chart, this tells us that, for example, if we go around this area and then today's earnings, so anything could happen. But if you're trading before that, if we go above this area, then this could be our target area. Or if not, if we break it, then we could see a stronger momentum. But again, these are kind of like the the areas that we have, right? And then if you wanted to look, that's like 6% kind of move where we are now compared to where we are now, to the upside or downside.
All right, good job. So let's see if we have any questions here, and then we can switch to Maciej.
Why does the lower band line not match the lower band value? Right, let's see. So how this chart works, right? So on the right side, let me show this actually. So on the right side, so this part of the graph here, you would see the levels for today for the next 5 days. So this is the level at the end of yesterday for the next 5 days. So these are the current level, and these are the levels of 246.46 that you see right here. So if you see here, this is 2.46.46, and then we have a risk trigger right here, 266.41, which is the same one that you see at 0.42. So these are the values from 1 day ago, so t minus 1. What you see on the back is really the back test. So that means, like, if you look at this, let's look at this candle here. 5 days before, you would have received this risk trigger value and this lower band value. So here what we show you is where the candle closed, where the risk trigger was, where the lower band was, and this is the data that you would have got 5 days prior. And this shows you if the price action was respected. So did the price close below the risk trigger, or did the price close above the lower band, right? So this is just back test. So it doesn't match because this one is forward looking, this one is simply historical. Hope it makes sense. But these values here would match what you see on your chart right here. So lower band, risk trigger right here.
Perfect.
Right. I'll pass it on to you, Maciej.
Let's jump in.
So, good morning, traders. Welcome in new regime, in new conditions, and exactly nowhere. Why nowhere? Take a look what is going on. This is option chain from futures, and what we have? Nothing. Exactly nothing. Zero volumes. Nobody is interested right now on jet contract sitting on that kind of price to handle from the option perspective. This is something new on the market. I really don't remember that kind of realities. So be careful with metals right now. It's a little tricky area where we are. So let's jump and check what is going on exactly. So first things first, our gamma exposure, jet contract, 57.00, yes, we have strike. Later, 56.50. Another one, 56, 55 as a round number. Below, 54.00, and later, a little bit tiny bars, 53, 52, and later 5K. Especially after crossing 49.00 plus minus this zone, we are jumping from whole option chain perspective to negative gamma regime. But let's check what is going on today. So first expiration, negative gamma regime. So what it means, Fabio, very often, because we have a lot of questions from the people, what it means when they have on our multi-expiration chart negative gamma.
Yeah, that means that we are sitting in kind of like a negative gamma environment, which is the red bars that you see there, and a lot of negative gamma is expiring. So that means that if we are in kind of like a negative gamma environment, it differs the way market makers will be hedging compared to when we are in a positive gamma, and that tends to increase volatility. When we are in a positive gamma, the price tends to stabilize more. So we're going to see like more like normal movement compared to a negative gamma environment.
So our switch point 5300, we can say today, from positive to negative gamma regime. So be careful with this. Looking on the piles, the main strike, of course, 5400 on jet contract. So right now we are 100 near $50 above the strike. And right now we can also check what is going on for tomorrow. So positive gamma regime, 5% of gamma expiring tomorrow. Main strikes 55, 55, 50, 54, and later 52.50. So I hope plan ABC, looking on our multi-expiration charts, is very clear what we have. So right now, where we are on our charts, few minutes before pit session will start, in the sky, really in the sky. Above blind spot 8, as you was seeing how option chain looks, is empty from the volume perspective. So in this case, I will tell you honestly, be careful, really be careful, because for example, at night after Globex open, we have crazy move, we touch very quickly 56 near 56, and then boom, we drop more than $100 in seconds, really in seconds. I was seeing this, unbelievable. So be careful with this, how we can use simple tools, draw your trend lines to have clear perspective what is going on. Each time we will touch this line, of course it will be weaker and weaker. Then after crossing this with volume, what we can expect, of course, flush, nothing else. What we can map together also right now, our roadmap. So GEX, call resistance, 2-time blind spot, give us right now support. Later, 1-day max sitting below on 54.20 plus minus zone with GEX. Another supporting zone, call resistance with blind spot and GEX 4. Another one, blind spot GEX and HVL. And the last one, the bigger magnetic zone, put support, 1-day mean, 2 times GEX, 2 times blind spot. So one more time, 5180 as a plan B. Right now, one of the last main support. Also in plan B, 5275, 5346, so 5350 we can say, later 5415, and right now C plan, because we are not such a far from this zone, magnetic one, where we have a cluster of gamma, blind spot, and call resistance, so main levels 55.010 till 54.60. Yes, it's crazy, but what we can say when we can jump $200 in seconds right now on gold. So that kind of zone as a support or resistance as a box, it's nothing special right now. I hope you also understand this. Conditions are changing, so we also need to change our vision in this case. Also, GVZ near 40, so more than 2 point plus minus 5% predicted move for today. Looking at this, we will stay in the range minimum as a normal move, $120 per move per day is predicted as a normal plus minus. Amazing. GLD, volume and open interest. Let's check what shows. Volume, the biggest 3 strikes, 500, 510, 490. Open interest, main 3 strikes, 490, 500, 480. So here we have a little difference in labels, but we can map very quickly 510, 500, 490, 480 as our main labels right now, looking to our volume and open interest, checking what is going on in all gamma expiration, main strike right now 486 plus minus, second 475, and later 500. Right now, looking where we are, we was touching 513 plus minus, and right now on GLD we are sitting 506. So exactly here where is tiny profile supporting zone, the first one 500, later we have a gap, and the main target 486 as a support zone, the biggest strike. And looking what we have also end of the month, only one trading day left, and tomorrow we will get the last one, GLD expiration in January. So saying about this, of course it will be good jumping to the nearest first expiration to tomorrow, 11% of expiring gamma, and in the profile main two strikes are sitting below 465 and 455, later 500 tiny, and 490 right now also tiny. Another expiration 2nd of February, 1% gamma right now is sitting there, main strike 510, later 490, and between those two levels we have of course also some strikes, each time 5 points plus minus, so 510, 505, 500, 495 should be sitting right now in our mind, and main strike 490 as a point when after this dropping we have window and we can jump to negative gamma regime. Later, let's check what is going on also on silver, where we are. So above magnetic cluster, core resistance, gamma wall, 1-day max, and not only, so 120 round number, right now we are battling in this zone. Above, do we have something 1-day max from silver, but also we have SLV, and we can also convert to silver futures label to have additional labels if we need, so no worries. How it looks silver gamma charts right now, 120 main strike, 121 right now tiny profile above, and below 118 we drop, and we are dropping exactly to negative gamma regime, so extended moves. Another expiration tomorrow from 6 to 2% we are changing, and take a look what is going on. 120, 110 as a two main targets for tomorrow. So how it looks very often, that kind of picture, Fabio, from Option Matrix, what we can expect looking at this, sitting in the middle, what you think?
Yeah, there's well, this is only the one expiration, right? So, and also bear in mind that with silver, there's not a lot of option activities, so it is possible that we see those kind of strike. I would also look at SLV as well as a
I will
counter.
jump there.
Yeah,
So we
and
have,
always, I think it's always important, guys. So just think about futures options. Not only we obviously you always have to account the risk. So futures is a derivative, options are derivatives, and futures options are derivatives of a derivative. So there's always more risk involved whenever you have an option on a derivative, and the assignment is kind of like you get assigned. So if you get assigned using options, you get assigned one future contract that also has a physical delivery. So you always have to account on the how the instrument work, and then always have to account why, for example, there was not a lot of volume, like Maciej was saying, because people are hedging at different expiration. They're like sending the risk to the future, and they're moving to different contracts probably. But the SLV ETF is a good idea, a good proxy.
SLV and SEAL from my perspective, because I usually looking also to SEAL more than SLV, because everybody are looking to SLV, and I would like to have a bigger picture. So if you jump there and check what is sitting inside, it will be awesome. But what is the most important thing, that we have labels also for those two tickers. So if you would like trading also silver, from my side, one tip, you have two tickers, SLV and SEAL. So remember this, what we have for that. Of course, end of the day data, intraday data. So you can check, you can upgrade this many times per day when we have intraday snapshot. So let's cover this together very quickly. Let's jump and have similar picture what is going on. So
And I think another thing, Maciej, is important to share what the difference is. So SLV covers the spot price of silver, so it's an ETF that tends to follow kind of like the price of the metal. SIL is the miners, right? So it tends
yes,
to follow like or invest in silver miners. So these are equities that are mining silver, and obviously it's tightly correlated to the price of silver. Of course, the more the price goes up, the more the miners would benefit from the silver price. But yeah, just bear in mind of the difference, right? So one is following the price of silver, one is investing in companies that are mining the metal.
so we have volumes sitting around 100, 105 on those two tickers. So it's similar. Also, when you are looking on open interest, similar view around 100. They're sitting a lot of stuff. Right now we are a little bit above, so this should help you if you are trading on intraday or maybe swing or others. So I hope that kind of tip is good for you. So let's remove our open interest and volume. Let's check also how those two tickers showing gamma structure. So also similar view, as we can see, 2 times positive gamma regime, 2 times above 100, sitting a lot of bars, a lot of positive gamma bars. So staying above, it should help us, especially when we are looking at that kind of picture, what is sitting inside from the option matrix and not only. Similar view we will have also on multi-expiration charts for SEAL and SLV. So it also that kind of information we can find in our dashboard in MenthorQ. So ladies, gents, also few cool things Patrick prepared to you. Pat, are you ready to switch?
Yes, of course. Let's go. All right, man. Welcome back. I hope everyone have yesterday a good day, good earnings day, or maybe was not trading. He was patient because of FOMC when you get chopped around, or he was having a really good day in gold or silver. And thank you again, Maciej, for the really nice preparation and also the recap in the afternoon, because we must say also, if you're liking the indices, if you're liking NQ, if you're liking SPX, whatever you like on the indices at the moment, we must also say that the momentum is at the moment clear on gold and silver. So this is at the moment the way I'm looking also, because there where the money is, there should I be trade, correct, Maciej? And I think again, thank you for your really good preparation. But now jump into my charts, because there are a lot of things in my mind today, and I will be trying to bring all together with you. So my number one thought when I was starting this morning was, can we really open tomorrow above 7,000, or will we close today above 7,000? This is the SPX from CBO. only New York Open. But again, so we was never be close to 7,000 as close. So this could be a really challenge. This is in my mind. Can we really see this? Question number one. But when I was also opening my charts, I don't know, guys, if you remember, I think it was on Tuesday where we was talking about this in the morning preparation. And I feel sometimes a bit stupid to talk about this, guys. But if I'm looking into my VIX chart, I see something again, and this is something what I really like. I see the put support, and the put support ZUDT, as you know, is one of our, if you be in the pro room and if you be here or you're watching the VIX masterclass, which is also available for all premium members, this is our A plus setup, where we most seeing price actions. And we was seeing some formation where we have the put support ZUDT from the VIXI and the put support from the VIX. So we use the VIXI as blind spot, where we're having exactly this box. I think it was on Tuesday where we was saying, hey, this is our decision area. Maybe we're going through this, or maybe we're going to the top, or we're going to the down. And yesterday we was talking about the 17 area. Yesterday, the 17 area was, I think, the high wall area, where we're switching from positive to negative gamma. And what is in my mind is the range from the VIX from, again, 1650 to be a little bit more protect for the upside between 1650 and 1450. At the moment, we are at 1679. Can we come down again into the range from 1650 to 1450? That's really my question at the moment. Or will we be going higher and touching again an A plus setup from the high and blind spots, the call resistance CODTE on the VIX? So this is at the moment my really number one question for the VIX. So if we're going higher, did we getting out of the range over the 1650, and will be touching the call resistance at around 70.60? Also, will it be close today? Will this be possible to close today the 7,000? Also, question on my end. And then we was yesterday doing our recap, and we was talking about the swing trading levels. Maybe Fabio, you remind on this. We was talking about the risk trigger from the NDX, and we was talking about I think it was the bands from the S&P. Let's open this again. Here we go. Give me 1 second. We will open this, and then we have to see on our chart. So we was talking about the upper bands that we should be also staying below the upper band and below the risk trigger here. We was talking about this yesterday. And guys, take a closer look. We was holding this again. We was not breaking out overnight. And also we was talking about yesterday in the afternoon session about the risk trigger wall here, what we have. This big risk trigger wall and the blind spot wall. We was talking about this. So the yellow one is based on yesterday blind spots. We can take this out, no worries. Here we go. So that's from today. But we was talking about the risk trigger wall, we should be very careful with. And I was also talking about this. Hey, this could be really possible that we're not getting through this, that we get a correction. And yes, this was already happened. So congratulations if you was taking the trade. I was also take the trade during London time when I was seeing that we're getting out from the put support and in the mind with the risk trigger wall, what we have here. But then I'm also switching to the bigger picture where we have the yellow ones as the previous day levels, white are the levels from today. So don't get confused about this. What I'm doing is I will be looking into the bigger picture from the indices. I have the Dow, I have the ES, and I have the NQ, and I have the Russell. Yesterday, Maciej, we was talking about the formation from the Russell. Really interesting at the moment.
Yeah,
if
the
you was
shampoo
not
one.
there, yeah, if you was not there, We have at the moment a really interesting formation on the Russell, what we should be having in our mind. And if we start now with the Russell, we have here a huge wall from call resistance, one-day max, and high was 0 DTE, what matched also with yesterday's call resistance. So this area here should be really interesting for the Russell, where we can expect some big price action. So very, very careful here if you're being Russell trader for the downside on the Russell. Also take a closer look here in this area. This could be also really interesting. But I'm not a Russell trader. I'm more an NQ trader. So that's why let's take a closer look on the ES and let's take a closer look on the NQ. And one thing when I was seeing this, what came in my mind, nothing has changed. I don't know. I don't know how you feel, guys. But I'm feeling like, hey, we have earnings. There was FOMC. Nothing changed. It is exactly the plan from yesterday. We have here our yesterday levels in yellow. We have here our gamma, our GAX wall, what we were talking about yesterday also. Nothing changed. Take a closer look, guys. One-day max, not changed. Call resistance, not changed. There is really, at the moment, nothing changed if I'm looking into the ES. So basically what we was having yesterday, it is already in the play. This was really curious for me because I was expected that we see some change after the earnings and after FOMC, but nothing is really changed. The only thing what has changed a bit is that the one-day max from yesterday is going a little bit higher on the Nasdaq, but the call resistance also is staying here. So that's why if you're going higher, if you're breaking again, also the same GAX wall here on NQ, then be careful if you're coming to the one-day max and call resistance. This is a really strong area with 26,500, what's in my mind. And yesterday, we was also talking about the box from call resistance, high was USDT, and put support for a potential, if you're getting the downside, for a potential reserve area. And this was exactly happened. That's why I would be highlighting this area also, because they are sitting call resistance 0 DT and gamma wall 0 DTE. If we put all together, where we're building an index on TradingView, where we're putting together the Dow, the ES, the Nasdaq, and the Russell, and we have here our trend lines, we're knocking at the top. And this is also something really interesting that we're knocking here on the door. And this is something where I be also observing now if we can breaking through this. If we can breaking through this with all together, as when we're building the index again with the Dow, with the ES, with the Nasdaq, and with the Russell. This is also something what I monitor at the moment. If we fail again, I would be looking more for the short side. Then, as you know, there will be some change in the options expiration with the Magnificent 7, and also HVGO will be coming there also. That's why I was building also an index for this to monitor this. Really interesting. We have here also our trend level, our trend line. We was also not breaking through this. We was retesting this, but there was really no breaking through. And how this would be now looking like when the market will be open. Really interesting. Will we test this again and fail? What will be confirmed more short side from my side? Or will we go and through this? What I would be more thinking like that we have also some reaction on the indices. So this is my bigger picture, but for now, also let's going back to the volatility, where we have VIX and VXN. VXN, of course, not open. VIX we was already talking about, but really interesting again, the ETF from SPXS, where's bearish, and SQQ, where's also inverse bearish. What we have here at the top, what I'm looking like that we have, I think, possible and really nice range here if you're connecting the levels from previous day and today with call resistance, high vol, put support, and put support 0 DTE. So we have here a range, and I'm expected, by the way, because we have earnings, there's also nothing big happened. If we're not getting any big news, that we're also staying here in the range. Every breakout from the range would be surprised me, where I would be thinking like we can see price action. But I believe we should here stay in the range, and this is at the moment where I'm also looking into. On SPX, really interesting for me is only at the moment from today's level, the high vol, if we are flipping from positive to negative gamma, how this will be acting. Will be this acting more as resistance, or will be this acting later as support? Again, but much more interesting is the range on the SQQ for me. And if we're looking into all option change, if we see some nice pattern where we can looking into, because we get many times the question, should we convert, for example, SPX to ES or SPY to ES? And one thing what I'm always saying, look to all option change. By the way, Fabio will have today a masterclass session for the MenthorQ Pro members, where we're talking about the difference between the option change, especially when it comes to futures, when it comes to indices or stocks and ETFs, who is trading what, why is this so important to look to everything. This will be today be answered also in the Masterclass Pro session. But again, let's take a closer look into the whole option chain, and let's see if we can find out again something interesting. We was talking already about the ES, where we have here our gamma wall, but again, at the top, we have here also our wall, and it will be starting with 7,050 and 7,066. So if we're talking about and trading setup, I think here you have a nice opportunity for 20 points. So if you want to take this, maybe with a risk reward from 1 to 2, could be a nice option. But also, if we fail this area, we have also a really nice area where we have a good risk reward here at the bottom. What will be the SPX telling us? The SPX will be telling us also the same what we're seeing here on ES, but with the difference that we have here our call resistance, gamma was UDTE, and from previous day here was sitting the call resistance, gamma was UDT, and call resistance. What you should be knowing as SES traders when you're looking to SPX, here the top from GEX 3 would be matched with the 7,000, with the GEX 1 and previous call resistance from SPX. So be careful here. If you come to the GEX 3, have in mind, then we are on the 7,000 area, whereas in psychology area for the SPX. If we're looking into SPY, Maciej, you was talking about this yesterday, and I have this also noted on my end. What's really interesting here is again on SPY, the call resistance where we have the 700 area. We have enough room at the moment to can go into the 700. So this would be really interesting after we breaking the 7,000 on SPX. The next one who I would be looking for guidance is the 700 from SPY. So this is again really interesting at the moment. So looking closer SPX 7,000, looking closer SPY 700. So especially if you're trading ES, and also for you guys, if you're trading now the NQ, because watch always what's happened also in ES. And maybe we find some dividends, we find some hanging fruit. On NQ, I think we already find a little bit more bottom here, as we was talking before on this area. And also we having here our GEX wall. And after this, we having again some wall. So personally, I don't like at the moment so much the NQ. There's too much walls behind of me. I don't see so many good risk reward area. So that's why NQ is a little bit hard for me. But what speaks for the NQ, and this is really interesting, what I was also noting, and maybe you see this also, this is here, if you're looking into the NDX, this is amazing, by the way, guys. And also, I will be going into the NDX contract from the Nasdaq, not in the CFD, because here we have a much better setup. What I be also looking into at the moment as NQ trader, and this is really interesting. So this is this. Can I say this here? This fucks my mind a little bit. Yeah, I think I can say this. I was saying this. Sorry.
Too late now.
Okay, too late. All right. But it is really like this. This gives me a little bit to think about why I'm thinking about this all the time. So because look at the beautiful gap here from GEX4 to high vol USDT put support. What could this be? A nice short with this as backup? Wow, this is a perfect plan B for me. Why is this a perfect plan B for me? Number one, we have here an opening gap, and then we have also open space. This is something what makes me really curious at the moment. This is something where I would be saying, okay, NQ, let's go, we have a deal. But again, I'll be a little bit more careful because what I'm seeing here on the Nasdaq. But if I'm looking only to the NDX, wow, it looks very nice and very beauty. I would really love this. And the QQQ, man, the QQQ will be confirmed what I'm seeing on the NDX. And this is really at the moment what gives me a little bit trouble in my mind. Why? Because take a closer look here on QQQ. We have a huge wall from one-day max to call resistance and call resistance CODT, and all the GEX levels above us. If we're breaking through this, okay, I get this. You guys get this. You're amazing. But after this, there's not so much room anymore. But for the downside, we have a nice box-to-box trade from call resistance CODT to put support CODT. And then if we're breaking through this, again, open space to high vol and one-day min. This would be confirming my plan B from NDX. For the long side, this is why my plan A to going long on the Nasdaq, I have really trouble with this, to be really honest. I'm looking more possible for a short on Nasdaq. If I don't get the short on the Nasdaq, I will be more looking into the metals. But if the short is looking up on NQ, boom, I will be there. Let's take a closer look, and then I promise you I will be done. And I have one question after this for Fabio. Let's take a closer look into the Max 7, but I have only Max 6 here because for make this more cleaner, my charts, and not mess up with 7 different charts, I have only 6. So Apple, what's going on Apple? We have earnings, but take a closer look at the put support during the day, how this will be acting today. Yesterday, this was our reaction area where we came down. Will this be happen today? Did we get some really nice stuff? What was giving us some, where we was thinking about, oh, this was a surprise based on the gamma levels from yesterday. Of course, Microsoft and Meta. Microsoft, why? Because we're breaking one-day min, but we're breaking also put support and high vol CODT. And but as you can see, we come back straight to the one-day min. This was amazing. But after this, we come now down and we're hanging around between high vol and put support CODT. What is matched up also with yesterday's high vol and put support CODT. For Microsoft and also for the Nasdaq, it would be really interesting if Microsoft can come back and breaking through put support and high vol and switching from positive to negative gamma, or will Microsoft confirm the downtrend? What is interesting on Meta? Of course, we are above all levels. The The earnings was strong, no worries, I get the point. But also what could be interesting for us on Nasdaq to know, will we see continuation when we come to this area here, to the peak from the earnings, or will we be dropping? If we will be dropping, this would be confirming also a little bit more the short side on the Nasdaq. Tesla, what should I say to Tesla? I don't know. Tesla is Tesla. Tesla is doing Tesla things. At the moment, we are coming back where we was yesterday. We're coming back to the decision area from high vol 0DTE, put support 0DTE from yesterday. And we are also now on the high vol and high vol 0DTE. Also interesting for us as NQ traders, can we going through the high vol 0DTE? Did we get downside pressure on Tesla, or will we holding the high vol and coming back to one-day max where we was having yesterday our earnings peak? So Google, I'm not a big fan from Google, to be really honest. For me, Google is staying here in the range. We have here a big cluster, but also after this, we have again a cluster. So on Google, we have only clusters. I don't like it really. NVIDIA is the last point, who is also really interesting, because we have a cluster on NVIDIA where we're staying below call resistance and call resistance CODT with our buffers from today. So this is interesting. Can we going out of this box? This would be also for me a decision area and information for my Nasdaq trade. Will we going down, breaking down, or will we breaking high? Here will be the decision area between yesterday's call resistance gamma wall and call resistance CODTE with today's call resistance CODTE gamma wall and call resistance. That's on my end, but I have a question, as I promised, for Fabio before we going into your questions, because I will see something, Fabio. And this could be really interesting, maybe for you also, guys. At the moment, of course, because of Middle East again and all the stuff, we have a little bit news on crude. And one thing, what I was seeing, Fabio, if I have the yesterday levels, so the yellow one yesterday, white today, the call resistance CODT is going much higher on daily expiration, CODT again, compare to the USO ETF, where we have the call resistance 0DTE going lower. Why we see something like this, Fabio?
What contract do you have on CL? Sorry, I can't read.
The H.
Okay. So basically, there's a couple of things. So first is if we go back to dashboard, we can look at, let's go to yesterday's data. So we can go to January 27. Right. So first we can open up our multi-expiration chart. And as you can see, we have our core resistance for the 0DTs from yesterday, 62.50. And then if we go back to today's date, this strike, as you can see, moved up all the way to 65. So not only looking at the levels on your chart, just also look at the change in the gamma exposure chart, because what that means is that most likely positions at 62.50 were closed and the market still believes that the price can go higher. So they are basically betting on a new strike, and in this case we're at 65, right? So we see change in positioning around 65 area. So that's kind of like a bullish kind of sign where we're shifting positioning. We're taking away from a lower strike and we're adding to a higher strike, right? So that's like how you can interpret that, and then together with all the other data that you have on CL. Now, if we go into USO, it's very important that there's one thing that you know, that USO tracks the performance of crude oil by investing in futures. And when you invest in futures, you always have to account to the future curve, the concept of contango and backwardation. So if nothing happens, the USO price basically will eventually lose money over time. So it doesn't really perfectly track the price of oil. So whenever you trade oil, the only real way of tracking the price of oil is through futures. If you trade the ETF, you always have to understand that when the ETF rolls from one future contract to the other one, it might lose value. So what you see there, Patrick, could also be because of that, right? So if we open USO on our chart, so basically, like, you always have to account that in the short term, it could track the price of oil. In the longer term, it's destined to follow the future curve of the oil contract. So if we are in a contango situation or in a backwardation situation, so if you are in contango, the ETF will eventually lose because they're closing the close month and they're buying the future month, and the future month is more expensive. So the ETF loses money in this transition. I hope that makes sense.
I'm not an options trader, but it makes sense here.
Yeah, so think about when you roll futures, you're closing the current month and you are opening the next month. So if we go back to here, let me show you again. All right. So in this case, actually, is the opposite. So here, what we're seeing, we are in a backwardation situation. So the price of the close contract is higher than the future contract. So when the ETF rolls from 1 month, maybe the February to the March one, they're selling at a higher price and they're buying at the lower. So they're actually making more money. If the curve was inverted, so if the curve was like this, that means that we are in a contango situation, and that means that you're selling at a lower price and you're buying at a more expensive price because you're taking exposure in the future, right? So that's very important to understand.
Good job. Then we have only 2 minutes left. Let's jump in 2 questions. How do you plot the VIX using which indicator? The answer is really simple. I'm using the MenthorQ custom levels indicator. We can go here again. If we going into, for example, man, I have so much open here. All right, here we have it. Okay, so how I'm doing this? Putting in the VIX levels from our dashboard or from the Quinn, and then convert VIX to VIX. I have auto ratio, and that's it. And how I'm using previous day levels, also really simple. I have one custom levels indicator where I have the levels from today, and one where I have the levels from yesterday. It's simple. So because if you change manually the custom level from today, and it's maybe tomorrow, what you do, you copy paste this, and then you change the levels here. Really simple. Not a big deal. But again, it takes a time. To be really honest, I need to set up everything around, I don't know, 30, 40 minutes. But it's worth because it gives me a really good overview about the market at the end. But if you're tracking like 20, 30, 40 different tickers, then it makes no sense. Then use the end of the day indicator. But if you have only a handful of stuff, what you're looking for, then of course it could make really sense. Yeah, this is how I'm doing this. But again, you could be confused because next week I could be doing something different again. This is normally because as a trader, I believe we grow every single day. Every day we get our lessons from the market. And I be one of the person who sit on the couch and think about, okay, what was good, what was bad today, what I can change, what I can maybe delete from my charts, what should I be add from the charts, what I missed. And I'm developing myself as a trader every single day. And that's why you see so many changes on my end. when I'm change something, because I have the feeling I must figure out now something new. Maybe I must change something. Maybe this will be helping me. Like in institutionals, I'm adding always new alpha to figure out if this works or not. All right. This is something, by the way, what I was learned from Fabio. And I think I was telling this twice when Fabio was telling about the story when he works and selling data for the to the hedge funds, to the institutionals, how they was using the data. This was an inspiration on my side, because when I was hearing this story, Fabio, every single day I be sitting on my charts, and every single day I'm looking in all my tools and thinking about, okay, what I'm missing, what I can add, what I can take out, what's no more helpful. And then, yeah, I'm developing every single day something new. All right.
Thank you, guys. See you guys later and tomorrow. And thank you for being here. Thank you, Patrick. Thank you, Maciej, and good luck in the live training.
Yeah, and good luck in the masterclass later in our pro room, Maciej. And no, not Maciej, Fabio. Sorry. See you later, guys. Have a good one. Bye-bye.